All right, welcome to another video here where we're gonna actually go into detail about renting your IRA and specifically what does that mean. I've got a lot of questions about it and I wanna focus on this today. And yep, we're gonna use the whiteboard. All right, so I'm gonna be that guy with the whiteboard today, okay? And I'm gonna use an analogy that we use to explain to our clients exactly what does it mean to rent your IRA. So what we're gonna do today is just go over like a summary, right? Just kind of overview. And while I do this, I want you to think about the investments that you have in your retirement accounts and see if this kind of fits. Does this make sense to you? And if so, leave a comment down below. And if it doesn't, leave a comment as well. Give me a hard time. All right, so let's get started here. We're gonna look with a general idea. Now, I'm gonna make this easy for math, all right? So we're gonna assume that you have $100,000 in your IRA, Roth IRA, whatever sort of long-term investments that you have, okay? You've got $100,000. It could be a taxable account too, just some normal brokerage account that you have that you're working with, okay? Now, to keep this easy, we're gonna assume that you have 4 investments inside of that IRA, Roth IRA, whatever it may be. Now, I don't know if you should have more or if you should have less, right? Each person's a little bit different, but for the sake of math, to keep this easy for me, I know what 4 divided by 100,000 is, and we're gonna work with that. So think about your investments though. Think about your IRA and the last time you got a statement, or if you can log in, or if you're at some place where you have an app and you can see what investments you have. Just take a second, think about that. Do you have 9 investments? Do you have 12? Do you have 1? Whatever it may be. By the way, if you have your statement with your investments and you want help with that, just you want someone to take a look and say, yeah, that's good. You have what you need for your situation. I do all of that free of charge. You can call me directly and I'll work with you on that one. So for today, we're gonna say you have 4 investments, okay? And I'm gonna just kind of draw our little portfolio pie here and we're gonna divide this into 4. All right, and if you're kind of going the traditional route, then you probably have some mix of stocks and bonds, okay? Unless you were specific with your advisor, wealth manager, or the company that you're working with allows you, you probably don't have too many specific stocks. You probably have some mutual funds, exchange traded funds, and some bonds or funds that revolve around bonds. So we're gonna try to follow along with that because as you're looking through your statements, you're probably seeing, hey, I don't actually own Apple, right? I don't own shares of Ford or whatever. You own different products inside of it, okay? So let's say you have a good mix of stocks and bonds here. So we'll say you have some S&P stocks. Sorry for my handwriting. Let's say you have some NASDAQ stocks. And then down here you have some mix of bonds. So we're gonna say you have some long-term bonds and some short-term bonds. Now the mix doesn't matter. You could have individual shares. Maybe you have shares of Ford, you have some NASDAQ stocks, you have some gold, maybe that's what's in there, and maybe you have some oil. So the product selection here doesn't matter. I have to start with something, okay? So in each one of these, we're gonna assume that you're split evenly, all right? So you've got 100,000, here's 25K here, 25K here. Now this is not necessarily the way you would do this, all right? It's just for example. Okay, so now we're gonna change it up a little bit and say, if this were your portfolio, this is what you have. Of course, you're looking at your statement, you're seeing what you have. But if this is what you have, how much control do you have over what happens to these investments? If the S&P goes up, how much did you control that? If the NASDAQ goes down, if you're watching this video most recently, you've seen some volatility in the NASDAQ, how much control did you have over that? You saw it go down one day and what did you do about it? Nothing, right? There's nothing you can do. Bonds, short-term, long-term, whatever, you have no control over it. So the rent your IRA approach, what we're really saying is, let's take a little control here. Now, with something like the S&P, the stocks that you own inside of the S&P or the products that you own that are S&P related, you can actually get people to rent them from you. Now this is your portfolio, you want to hold it, it's a long-term position for you, you're going to keep it until you retire. But in the meantime, what if someone would pay you, right? I want you to pretend that each one of these are now houses. Okay, so this is now a $25,000 house. This is a $25,000 house, and so on, right? If this was real estate for a minute, and instead of having individual positions in your retirement account, you had homes, right? You bought a house, you bought a house, you bought a house, and you said, this is my retirement plan. I am going to have these 4 homes, and when I retire, I hope to sell these 4 homes for more than I paid for them. Perfectly logical, right? That is a retirement plan, and people do that as well. However, you would not buy 4 properties and then just leave them there and hope that they gained in value, right? What's the next step after you buy a piece of real estate, investment real estate? You buy a house or apartment or something, whatever the investment is in real estate, and the next step, aside from maybe finding some, improving the kitchen, painting the walls, changing the carpet, whatever, the next step is to find a tenant. Get someone to start paying you. Now, why? Why do we do that? If we paid $25,000 for a house and we can get it's a $25,000 house. So let's say we got $200 a month, and then maybe over here we got, I don't know, $250 a month. I have horrible handwriting, don't I? Okay, so let's say you started getting tenants for these. That's what you do in real estate. You get people to start paying you rent. So now on the long run here with your retirement portfolio, you've got these homes. Hopefully the value of these homes go up, right? Over time, you know you'll be just fine. But now you have this rental income coming in. The point I'm trying to make is that you can do the exact same thing with the investments in your portfolio. We're going to pretend that these holdings now, these 4 holdings, are homes, right? We know they're not, they're just investments. And we can go and get people to pay us for these, right? So for the S&P, we can get someone to give us the $200 a month, the NASDAQ, the $250. Bonds are a little less exciting. You don't get to do that as much with bonds, but you can get people to start paying you for it. Why would you do that? Why would that be an extra step that someone would take? Well, just like on a rental property, if you got someone to pay you $200 a month, that means that your cost basis is now going lower and lower each month. Each month you're getting $200 or whatever the rent is, you're getting it to come off what your cost basis is. Now you have some control, because if the S&P decides that it's going to go down for a while, the rental income keeps coming in, right? So even though you're losing in the value of your house, maybe bonds are going up and the S&P's decided it's going to go down a little bit, right? Big deal. You're going to get a little rent here and a little rent here. Now listen, this is not something that's scammy or slimy. I try to use this analogy just to break it down for you, but people like Warren Buffett, some of the biggest names on the planet that you know as successful investors, they're doing the exact same thing. Now, they're using technical terms for it, and if you're interested and you want to learn more, the actual technical term for this is just a unique strategy that is wrapped around selling covered calls. So renting your IRA is no different. The actual technical term is called selling covered calls. But for the average person, to explain this to them and say, hey, this is what you have. Why are you just sitting there and doing nothing? This is just an easy way to explain it. So I hope you enjoyed. Feel free to check out our other videos that get more in depth with specific stocks and specific funds that you probably do have in your retirement accounts. And we'll see you soon.